feel like somebody's watching me.
And I think of all the times you screwed me over.
Assalamu alaikum warahmatullahi wabarakatuh. We are Group 3. Today we are going to talk about the analysis of business cycle and economic crisis. So let me explain what is the business cycle. The business cycle generally refers to the regular expansion and contraction of economic activities along the overall trend of economic development. It's the fluctuation of gross national output, gross income and total employment, and the alternation of cyclical fluctuation of the expansion and contraction of national income or overall economic activity. Next is the stages of the business cycle. All business cycles are bookended by a continued period of economic growth, followed by a continued period of economic decline during its life. A business cycle goes through four identifiable stages: expansion, peak, contraction, and trough. Expansion. During expansion, the economic experiences relatively rapid growth. Interest rates tend to be lower, production increases, and the inflationary pressures build. Peak. The peak of a cycle is reached when growth hits its maximum rate. Peak growth typically creates some imbalances in the economics that need to be corrected. Contraction. A correction occurs through a period of contraction when growth slows, employment falls, and the price stagnates. Trough. The trough of a cycle is reached when the economic hits a low point and growth begins to recover. The cyclical changes in the economic are caused by a combination of many factors. There are some internal factors within the economy that may cause these changes, and some external factors that may cause economic prosperity or depression. The first one is changes in demand. Changes in demand will cause changes in economic activity. When demand in the economic increases, companies begin to produce more goods to meet demand. There is more output, more employment, more income, and higher profits. They will lead to economic prosperity. The second one is investment fluctuations. Investment volatility is one of the main reasons for the economic cycle. Investment will fluctuate based on many factors, such as economic interest rates, entrepreneurial interest, profit expectations, and so on. The increase in investment will lead to an increase in economic activity and cause expansion. Reduced investment will have the opposite effect and may lead to troughs or even depressions. Third is money supply. Business cycles are a purely monetary phenomenon, so changes in the economic supply will bring about the trade cycles. An increase in money in the market will cause growth and expansion. External cases of the business cycle. The first one is war. During times of wars and unrest, the economic resources are put to use to make special goods like weapons, arms, and other such war goods. The focus shifts from consumer products and capital goods. This will lead to fall in income, employment, and economic activity. So the economic will face a downturn during war times. The second one is technical impact. New technology will mean new investment, increased employment, and consequently higher income and profits. Next is natural factors. Natural disasters such as floods, droughts, and hurricanes can cause damage to crops and cause huge losses to the agriculture sector. Food shortage will lead to soaring price and high inflation. The demand of capital goods may also decrease. Last one is population expansion. If population growth gets out of control, it may cause problems for the economy. Basic population growth is higher than economic growth, and the total saving of an economy will begin to decrease. Then investment will also decrease and the economy will face depression or slowdown. Which types of companies are less affected by the business cycle? State-owned enterprises such as banks, petroleum, and electric power in a monetary position. Self-contained military industry enterprises, such as national defense rockets, are almost the opposite of economy. The worse the economy, the more development. Food, clothing, housing, transportation, and so on are the most basic consumer product companies that are closely related to people's lives, especially food. The last one is the education industry, especially those related to basic education. At the same time, durable goods affected most. Steel and durable consumer goods are cyclical industries, and their movement status is closely related to the economic cycle. When the economic is on the rise, these industries will follow the expansion. When the economic is in recession, these industries will decline accordingly.
So now let's look at economic crisis. We will be talking about the definition of economic crisis, the examples of economic crisis, and the history of economic crisis to further understand the causes and impacts of an economic crisis. The definition of an economic crisis is a situation in which a country's economy deteriorates significantly or plummet. It is also known as a financial crisis in most cases, and during this crisis, GDP is typically declining, liquidity dries up, and property and stock market prices plummet. It is an economic downturn that gets worse and worse. So we know that during an economic crisis, the business activity or the economic activity is usually at a low rate. And that is why GDP is typically declining. So a little bit of idea regarding liquidity. What is liquidity? Liquidity is the ability for assets to be turned into cash easily, quickly, and at lower spreads without changing its market price. So in the case of an economic crisis, assets can be turned into cash, but not as easy. It would take a longer time and at a higher spread. Economic crisis is also defined as an economic downturn that gets worse and worse. We have learned in the business cycle or the economic cycle that recession is the beginning of an economic crisis before it continues to plummet into the trough, which is the most bottom layer of an economic activity. The economic crisis will usually last more than a year before it enters the expansion cycle or phase. The bursting of a speculative financial bubble, as mentioned in previous class, has led to several economic crises, such as the Asian financial crisis in 1997. This financial crisis has affected countries like Thailand, Indonesia, Philippines, and Malaysia as well. A stock market crash happens when there is a drastic decline in stock prices caused by panic selling, and this is usually driven by speculative activities and economic bubbles. A stock market crash is also defined as a social phenomenon when a well-known or renowned market participant starts to sell their stocks. Other market participants will follow up by selling their stocks, which will lead to panic selling. Next is a sovereign default. A sovereign default is when a government fails or refuses to pay their debt. So what happens? This can lead to an economic crisis when investors start pulling out their investment from that country. A currency crisis occurs when there is a serious doubt towards a country's central bank whether they have enough or sufficient foreign exchange reserves to maintain the country's fixed exchange rate. An economic crisis may be limited to banks or spread throughout a single economy, the economy of a region, or economies worldwide. Next, we are looking at the history of economic crisis. We have the Great Depression, the early 1980s recession, the Asian financial crisis, and the Great Recession. The Great Depression 1930 started in the USA when there is a fall in stock prices on the 29th of October 1929. And that day is also known as Black Tuesday, where the GDP of the USA fell by 15%. The Great Depression lasted until the beginning of World War II. Next is the early 1980s recession that started in 1980 until 1983, which was led by the 1979 energy crisis. The 1979 energy crisis was caused by the Iranian Revolution, and we know that Middle East is one of the suppliers for oil commodities. And during the Iranian Revolution, Iran was in war with Iraq, so the production of oil was disrupted. So there was a disruption of global oil supply and the oil prices rise globally. And that was the cause of the 1980s recession. The Asian financial crisis 1997 started in Thailand and spread it all over Asia, in countries like South Korea, Malaysia, Singapore, Indonesia, and the Philippines. South Korea, Thailand, and Indonesia are the countries that suffered most from this Asian financial crisis, to the point where the president of Indonesia at that time, Suharto, was forced to step down due to the increase in devaluation of the Indonesian rupiah. Lastly, we are looking at the Great Recession 2007 until 2009 that started in the United States of America. And what happened is that the government failed to regulate financial industry policies. So there were a lot of toxic mortgage lending and shadow banking system. What is shadow banking system? Is that there was a lot of financial intermediaries creating credit without being subjected to regulatory oversight. This caused a lot of excessive borrowing by consumers.
Cause of economic crisis. The first one is hyperinflation. Hyperinflation occurs when the government allows inflationary pressure to build up in the economy by printing excessive money, which leads to a gradual rise in the price of commodities and services. Government resort of creating excess money and credit with the goal of managing an economic slowdown. Hyperinflation occurs when the government loses control of the price increase and raise the interest rates as a way of managing the accelerating inflation. The second one is stagflation. Stagflation refers to a situation in which the economy is growing at a slow rate while still simultaneously experiencing high rates of inflation. Such an economic situation causes a dilemma among policymakers, since the measure implemented to reduce the rise in inflation may increase unemployment levels to abnormally high levels. Stagflation and its effect on the economy may last for several years or decades. For example, the United States experienced stagflation from the 1960s to the 1970s. During said period, economic growth was stagnant and the inflation peaked at 30% per annum, while the inflation rate in the United Kingdom was at 20% per annum. Once stagflation occurs, it is usually difficult to manage and government must incur huge costs to bring balance to the economy. The third one is stock market crash. A stock market crash occurs when there is a loss of investor confidence in the market and there is a dramatic decline in stock price across different stocks trading in the stock market. When a stock market crash occurs, it creates a bear market when price drop 20% or more from their heights to hit new lows, and it drains capital out of business. Crash occurs when there is a prolonged period of rising stock price earning ratios exceed long-term average, and there is excessive use of margin debt by market participants.
Assalamualaikum, my name is Muhammad Haziq bin Nur Azam and my metric number is 2114659. As for the impacts of the economic crisis, it can be determined firstly in the GDP when it diminishes for 2 consecutive quarters. For instance, according to the gross domestic product of Malaysia in the first quarter 2021, the GDP has marginally declined about 0.5% while continuing its recovery from a decrease of 3.4% in the preceding quarter. It shows that the COVID-19 pandemic has reduced the economic pace of the country and Malaysia needs to utilize the recovery efforts for the economy to go back on track. Furthermore, the economic crisis will bring a significant impact on foreign direct investment (FDI). Firms' ability to invest will be restricted as there will be a limited access to credit. This is because the economic downturn will lead to a reduction in demand for firms' products as the consumers' incomes decline. Thus, the return on investment would be lower. For example, due to the COVID-19 crisis, FDI flows fall globally by 35% in 2020 to $1 trillion from $1.5 trillion in the previous year. The lockdown slowed the progress of existing investment projects and the fall was heavily skewed towards developed economies, where FDI fell by 58%, in part due to corporate restructuring and intra-firm financial flows. Unemployment will be the common issue whenever an economic crisis occurs, because when the crisis continues to increase in its severity and the duration, businesses will usually terminate their employees to cut costs and reduce losses. Usually in a recession, because many businesses across many different industries and markets are all failing at once, the number of unemployed workers looking for new jobs goes up rapidly. The available supply of labor vacancies for immediate hire goes up, but the demand to hire new workers by businesses goes down. Moreover, during the economic crisis, stocks will fall and dividend will plunge heavily. This is because the markets can be volatile, with share prices experiencing wild swings. After all, the investors react quickly to any hint of news, and they will withdraw their money out of the stock market. Therefore, as declining revenues show up on its quarterly earnings report, the manufacturer's stock price may decline. Dividends may also slump or disappear entirely. A credit crunch is a sudden reduction in the general availability of loans or a sudden tightening of the conditions required to obtain loans from banks. A tightening of credit conditions will impact the businesses, as the interest rates may rise initially, then fall as the monetary floodgates open. During the recession, the standards for lending in the market tend to be tighter, and lenders are more selective of the risks they are willing to take on any interest rate. Bankruptcy will occur if a company's debt cannot be repaid as agreed upon the lending contract, which commonly happens during an economic crisis. At this time, most companies will rely on the moratorium provided by the government. This rescue plan gives a company a breathing space for them to construct a new survival plan. Thank you.
Assalamualaikum, my name is Ainuzini Rabetika Marifin with the number metric 191670. So, I will proceed to the lesson learned or conclusion from the topic we have been discussing. First fact that we learn is that business cycle have 4 stages of pattern over the time, which are expansion, recession or contraction, peak and trough. Where expansion is basically means the points where it is generally stable or normal, where profit is steadily growing, production and unemployment remain low, also the market is well. For the peak stage, it is when profit going out of control. Differently, recession or contraction is actually the fall after peak stage, where it is fall drastically. However, for the true phase, it is the lowest point of the business ever faced than usual drops. Secondly, business cycle causes by 2 effects, which is external and internal effect. External are those built outside economic, like wars and gold discoveries, while internal effects built within the economics, like money supply and investment. That is why internal effects are directly influence the organization, while external effects are indirectly influence the organization. Okay, let's go to the economic crisis of the business cycle. Economic crisis is actually always happen all around the world. It is basically the worst part of business cycle because it is cause decline in real income per capita, increase in unemployment and poverty. The worst economic crisis in the world happened on 1929 and wiped out millions of investors. Like I mentioned before, the dominant impact of the economic crisis are increase in unemployment, loss of income, and increased vulnerability. In short, even economic crisis is a short-term event, but it can lead to the long damage to the individual's economic broadly. I think that's all from us. Thank you.